Hello, I'm David Mandy, President of OlM Partners, and I want to welcome everyone today to the Osisko Mining Town Hall call. For those who are new to the story, Osisko is a gold exploration company with a rapidly growing asset base due to continued success, high-grade drilling at their Windfall project, located in the Abitibi Greenstone Belt in Quebec. We caught the interest of many of you through our short 6-minute videos. You've been briefed on the company, and now we're going to go into more in-depth discussion, and also Q&A with management, which is going to be the largest part of the call. We have an impressive and diverse group of investors on the call and analysts, many of whom have questions. So let's get started. Our host today, it's a real pleasure to introduce, is John Brzezinski. John is the CEO. He's the president and director of Osisko Mining. Trained as a geologist. He had over 25 years of experience as a professional geologist on international mining and development projects. Spent the early part of his career under canvas. He's also the director of Osisko Gold Royalties since its inception in 2014. And John was one of the 3 original founders of Osisko Exploration, Osisko Mining Corp. He was part of the management team that put into production the old Osisko Mining Company, which was a smashing success. It sold to Yamana and Agnico Eagle in 2014 for $3.9 billion. Give me a sec, I'm just getting my, and I think what really differentiates Osisko and John's team from their exploration peers is that this management has had full cycle experience. The same team of people having taken multiple assets from birth through full production sale, such as Canadian Malartic. John and his team are continuing to add value to shareholders by increasing ounces per share, driving down finding costs per ounce, given their location, the existing mature infrastructure, new technology that the team's employing, and their high-grade ore allows them to be one of the lowest cost producers on a per ounce basis. So on that note, I'm going to turn the call direct over to John.
Thank you, David, and good afternoon, everybody, and welcome to the Osisko Mining presentation on Windfall. Usually before I start these talks, I like to point out that this cover screen slide isn't a stock photo. Those are some of the last bricks that were poured from Canadian Malartic while we were still operating it. As David mentioned, Sean Roos and Bob Wares and I started the original Osisko back in 2003. And then over the course of a short 6.5 years, we went from first drill hole to first gold bars. We sold that company in 2014 to Agnico and Yamana and started Osisko Gold Royalties basically the next day. Within a year, we started Osisko Mining version 2 because we kept a lot of our high-end technical people, our explorers, discoverers, our engineers, knowing that if we didn't have mines to find and mines to build, we'd quickly lose that talent in this very active and competitive market. So today's description of Windfall, I'm going to keep brief. We'll do about 10 or 15 minutes. So I know, as in talking to David, that there are quite a few questions that people would like to share. Just trying to get my screen to come down.
John, if you go to view full screen mode, then you probably can use your
there we go.
Arrow keys.
Just coming up here. Thank you. Okay. So I will be making some forward-looking statements. What we've done basically at Windfall over the past 5 years has been a repetition of what we did at the Canadian Malartic deposit in the early 2000s. We found a deposit that had been misunderstood and misdiagnosed by previous operators, and then quickly put a big drill program on it. In the case of Canadian Malartic, we went up to, I think it was 17 drills at one point. We drilled about 1.5 million meters, and we developed what is currently Canada's top gold mine. It produces over 700,000 ounces a year. It's one of the top 10 mines in the world. Windfall, in a similar sense, was an existing deposit that people knew about, but it was interpreted at the time to be a shear vein-hosted deposit. We did our first drill program, which at the time to us was a large program, 50,000 meters, with the intent of seeing what we could figure out about the deposit that might be different. And very quickly, we realized that we had a very different deposit. There's a strong relationship to intrusives, and understanding that was key to being able to define the deposit. We very quickly doubled the program. We actually doubled the program 4 or 5 times successively, to the point where by September this year, we'll have drilled about 1.5 million meters. We currently, with the outstanding resource estimate that we did earlier this year, we have 6.1 million ounces. We expect that to go up to around 7 million ounces in preparation for the final resource that will lead into our feasibility study next year. This slide shows a few of the very high-grade samples that have come out of our drilling and from the underground work. While we've done 1.5 million meters of drilling, we've also to date done about 8.5 kilometers of underground exploration ramp. We've collected 2 bulk samples. We're advancing the ramp to a third, and so it's given us excellent access to the deposit to confirm what we're seeing in the drilling underground. This slide shows the resource that we put out earlier this year. Again, in aggregate in all categories, about 6.1 million ounces. In measured and indicated, we have an average grade of 9.6. What we've seen in the last 2 or 3 resource updates we've done on the deposit is as we do the infill drilling, we see that grade go up, raising the caps on the high grade zones by confirming that indeed we have high grade between high grade. And if you've been following any of our press releases over the last year or 2 or 3 years even, we're consistently getting very high grade numbers coming out of what we previously discovered as high grade zones, confirming that we do have a high grade deposit on our hands. We expect that average grade that we're going to use in the resource to end up being about 10 grams per ton or better. And that'll be the resource that comes out pre-Christmas, leading up to the feasibility early next year. We put out a preliminary economic assessment update following the resource earlier this year using $1,500 gold. We have an after-tax IRR of about 39% and a net present value of about 1.5 billion Canadian. If we were to plug in today's spot gold prices, that IRR would be north of 50% after tax, and the net present value would be well over $2 billion. In this scenario that we used, we have a mine life of about 18 years. Again, because it's a PEA, we're running it to the end. But typically when you do your feasibility, you're looking at your 10-year mine life. What we expect when we get to the feasibility is that we'll have a full 10 years of 300,000 ounces per year production plus. With the grade increasing, we may see that fall somewhere between 300 and possibly 325,000 ounces per year or better. Certainly on the basis of the 2 bulk samples we've taken to date, we've done 2 5,000-ton bulk samples. They both came back respectively about 25 and almost 90% higher grade. So there is some anticipation when we get to mining that we might see higher grades, even higher than what we're seeing in the resource. That would be a function of the capping that we do on our resource numbers. Under 43-101 rules, you don't use all the gold you find in your drilling. You try and come up with a conservative estimate, but certainly all of the detailed work that we've done to date has been confirming that we are indeed being conservative on our resource grades and our resource estimates. This gives us a mine capex of about $544 million Canadian. We expect to see that number drop down somewhat by the time we actually get to the fees. This number incorporates a power line. We're hoping to have an announcement on the power line before the end of the summer, which would basically take that power line cost off the capital capex number. This next slide shows the resource in different colors. The blue and red are the measured and indicated. The green is the inferred resource that we haven't drilled to those categories yet. This part of those upper zones are what we're focused on right now, working to complete over the next 3 months as we come into the fall and get that final resource done. Our entire resource that we're using right now and the one that we've published is above 1,200 meters. This is what we're going to use in the feasibility. It's not a deep deposit. It starts at surface and goes down. It's very regular. It has about a 45-degree plunge. And we have a number of parallel zones, which leads to a low mining cost because we can access multiple zones with for example, one development drift. So that cost of that access to those zones is spread out over multiple zones as opposed to one. Back to the all-in sustaining cost from our preliminary economic assessment, we're expecting it to be around $600 US an ounce or lower, based on the geometry of the deposit and low mining costs. This next slide shows the upside potential that we have still existing in the deposit. Even though after 1.5 million meters of drilling, we've defined 6.1 million ounces that we believe will come in towards about 7 million by the fall this year. The deposit zones, the main zones, are still wide open going to depth. We do have exploration holes, both that we've drilled in the process of our infill drilling and as deeper exploration holes that show economic grades going well down below 2,000 meters. Our decision at this point has been not to try and drill those off. They don't really make a difference on the economics of the deposit because to mine them would fall outside that 10-year period, so they don't really have an effect on the NPV or the IRR. But certainly we think that with time and as you get mining, that this deposit will grow without too much trouble into a double-digit million-ounce deposit and something classic and typical of Canadian high-grade underground mines that might end up having a sort of 20 or 30-plus year mine life. We drilled one hole that we completed early last year that went down to about 2.8 kilometers vertical, and we were still in mineralization, big wide halos that we typically only see around the high-grade zones. So even below the 2,000 meter level, we have very good indications that the deposit still has strong legs going down plunge. This next slide shows the Windfall Deposit in comparison to the known and existing producers in both Canada and the US. Windfall, if it was in production today on the basis of our PEA, would easily fit into the top 5 or 6 in either Canada or the US. If we are successful in seeing that grade increase, and if our production numbers come up, it would be easily be within the top 1 or 2 top underground producers in Canada based on net annual production. This next slide shows the underground access that we have in place and planned for Windfall. In black is the underground exploration ramp, which we've used to take the 2 initial bulk samples and complete our infill drilling. The green zones show the remaining work that we would do to have the access for the deposit and over the mine life of production. This next slide again shows the mining blocks that we've been using in our PEA and that we will be using in our feasibility, subject to the changes that come with the additional drilling. In blue, we have 20-meter high stopes, and in yellow, 25-meter high stopes. This next series of slides show the relative progression of the underground infrastructure in 2025, when we're in our first year of full production, and going in about 2-year tranches here. You see the progression of how we will mine this deposit, and this is how we get our 300,000 ounce a year plus production. It's a very good deposit. We have excellent access to it, and the infill drilling is only giving us more ounces on some of those levels. Some of those areas that I showed in one of the earlier slides in green, we expect to flesh out some of those areas, so we'll have even better access to some of the ore. This current slide shows the process flow sheet. It's a very simple process flow sheet with CIL, grinding, and gold extraction. This next slide shows a plan view of the mine layout. It's very tight to the infrastructure of the deposit. We currently have 1 ramp access underground. We're putting in a second above the link zone, and then all of the additional facilities will be very closely situated around that. Sorry, going up and not down. A couple of pictures of the mine design that we have. This next slide shows the deposit projected to surface underneath that mine infrastructure, and you can see again, one of the things that leads to the low mining costs is the location of the mine and the mine infrastructure with relation to the actual ore body. We come to surface and basically in the link zone particularly, it's right next to the mill. This slide shows some of the contributors to our feasibility and engineering work. These are all brand names used by both large and small companies alike, many of which we've worked with in the past. We've been doing the third-party numbers that we use in our PEA and we'll be using in our feasibility study. Room to grow. Over the past 5 years or closer to 6 years now, I guess, with the drilling that we've done, we've averaged about 5 ounces plus per meter drilled. Keep in mind that many of the holes that we drill are about 1,000 meters or 1,200 meters long, and we're looking at 3 to 5 meter intercepts. The ore body on average is about 3.5 meters wide, but that's not to say that in places we don't have areas that go up to 15 or 20 meters wide. We are focusing some of our infill drilling right now on some of these wider areas, which will certainly help when we get to the feasibility in terms of the access to tonnage. But we have some of the lowest discovery costs in the world at $38 US an ounce discovered since we started. That compares with about $60 to $65 US on a global average basis. So while it seems like we've done a lot of drilling, we've added a lot of ounces for those meters drilled. You can see compared to the on the left, the meters drilled, to the right, the ounces that we've discovered. As we complete this program on that curve, that's what gets us up to about the 7 million ounce on average basis. And if we were to continue drilling, I'd have no trouble believing that number gets up over 10 in the future. But typically underground mines don't get drilled out before they're mined. Once we get into production, the ounces that we mine would get replaced through forward drilling and exploration drilling on an annual basis. And this is where you get that longer 20, 30, 40-year mine life that you see typically in Canadian high-grade underground mines. This next slide back again to those open areas, the upside potential. Again, not particularly deep. They're just down plunge of known zones. We have some of the highest grade and some of the thickest zones in the deposit that have been contributing a tremendous number of ounces, particularly over the last 2 years from zones like Triple Links and Links 4, where in our resource model and in our engineering models, we're basically cutting them off at the drill information that we have at that point, but we know that those zones continue. We do have a full expectation of adding some significant ounces as we explore those zones further to depth. This slide shows a block model view of the Windfall deposit and some of the exploration targets that we have around Windfall. Recently, we announced the discovery of what we call Golden Bear. It's about 1 kilometer north of Windfall proper. It's on a parallel fault that's related to the Windfall system. Similar geology, similar alteration, similar mineralization. And we had a very nice high-grade hit over about 6.3 meters. We are doing additional drilling on that zone right now. We'll be adding some drills to that as we go into the fall, and certainly once we complete the infill program, we'll get as many drills as we can up there, but we are having some success in chasing that out. So stay tuned for additional numbers coming out of Golden Bear. We have some other targets proximal to the deposit, Fox, which we discovered about 3 or 4 years ago, and lots of other areas, because if you look at all of the drilling that we've done since we started this project in 2015, it's almost exclusively been restricted to that 4 or 5 kilometer square area around Windfall. Our property package covers over 2,700 square kilometers. It's the size of a district of the same scale as either the Val-d'Or camp or the Timmins camp. So we think that there's a lot of upside potential to find many other deposits as we go into the future once we get Windfall up and into production. On the next slide here, just as a summary, Windfall is certainly a world-class scale deposit and growing. The grade is continuing to go up as we complete the infill. It's showing no signs of stopping as we chase it down to depth. Current average grade of our measured and indicated is 9.6 grams, but we expect to see that over 10 by the time we get to the end of the year. Links in particular, if you just segregate Links out of that resource, Links is over 11 grams. Looks like it could go to 12 by the time we're done. We're drilling on a very cost-effective basis. Our bulk samples have been confirming that grade as we get underground, and again, it's a little different from a deposit that you just have drill holes into. We've actually been underground and mined out 2 5,000-ton bulk samples, which have confirmed to a very positive effect the numbers that we're seeing in the drilling. We'll have that third bulk sample collected by early next year, and that number will be out sometime as well, about the same time as the feasibility study next year. We'll have a power line update by the end of the summer. We'll be complete the drill program by the end of September. At that point, we will continue some drilling, but certainly not on the scale of 35 drills. But we'll see more drills migrate over to Golden Bear and some of the other exploration targets on the property. That definitive feasibility study and the final mineral resource estimate and the definitive feasibility study will be out by early next year. I think as we get those extra drills turning in the field, we're going to see a lot of interesting things pop up and down the belt outside of Windfall. But certainly it's a world-class deposit with our market cap right now is about $1.2 billion. Projecting, if we stay on that course and we're successful in getting to that 300,000 ounce a year plus production profile within a couple of years' time. That basically gives us the opportunity to see a re-rate in the market. There are some other smaller scale producers out there right now with about 100,000 ounces a year producers that are trading closer to about a $2 billion market cap. You can do the simple math on what it would mean if we were to achieve that 300,000 ounce a year plus production profile. But it certainly, with the current gold market and the way that the deposit is progressing, looks like we have a very bright next couple of years ahead of us. At this point, David, I'll turn it over to questions.
Thank you, John. Very well presented. Let us start with our pal Jeff Masseri. Jeff, questions today for John?
Yes, certainly. A great presentation, John. That was very nice. Thank you. How much cash do you have on the balance sheet?
As of today, cash and investment position is about $250 million. On top of that, we have about $54 million coming back from the Quebec government as a check. Quebec has an incentive program where when you spend hard dollars, you get about 38% of the cash back, which then gets reinvested into the ground. I've had that question from some of our institutional investors over the last little while. What happens with your drill program? Because we've certainly had the habit over the last couple of years of going out and raising $50 or $70 million on an annual basis since we started to do the drill program. It was a big drill program. But I don't know of any other way to define ounces but drilling. But we're certainly not going to have to do that. Even if Golden Bear turns out to be a second windfall, we aren't going to have to go back and tap the market to raise money because again, currently there's $54 million coming back that we have to put into the ground. And then we get 38% of that money back and rinse and repeat for a couple times. And quickly, that over the course of about 3 years, that becomes something north of $70 million. So that's the money that we're going to use as we go forward to do the property-wide and district-wide and Golden Bear drill exploration.
Thank you. Well, at Greystone, we've given up the word mining. We don't call it mining anymore. We call it permitting. Where are you at on your permitting, please?
Yeah, certainly. You can't begin permitting until you deposit your feasibility study. So having that final resource come out, and it'll be out, we'll finish the drill program by, I think, end of September, maybe early October. We'll have the final resource out pre-Christmas. I expect the feasibility early in 2022. At that point, we go through the completion of the EA, which we would expect to be finished by the summer of 2022. And at that point, you can apply for your permits. In Quebec, it's when we did the Canadian Malartic mine, and remember that was $1 billion plus, or about a $1.2 billion mine build. It was a big open pit mine located in the center of the town of Malartic. We had to move well over 300 houses. That process took us 11 months from start to finish. We had to go through public hearings. We're fortunate with the Windfall Deposit that we don't have to go through the same process. Permitting in Quebec would usually take about 12 months. In this case, because it falls under what we call the COMEV, it is the Cree First Nation government and the government of Quebec, which have the committee. So what we're hoping is that it'll take a slightly lesser period of time. But certainly we don't expect it to be any more than 12 months.
Okay, thank you very much.
Thank you.
Thank you, Jeff, for leading us off today. Let's turn to Howie Flinker. Howie, questions today for John?
I had to unmute. Hi, John.
Hi, Howie.
How many shares do you have outstanding?
Current shares outstanding are about 360 minus about 7 million shares, which we've repurchased. So it's about 353 million, 352.
And fully diluted, how many?
Fully diluted, they're about another 20 million shares on top.
Okay, roughly 373. To eliminate the power line, would that take 50 million Canadian out of your CapEx?
Easily.
More. And how much extra would Hydro-Quebec charge you for that?
For
building the power line?
Well, Hydro-Quebec wouldn't build us a power line. We're very fortunate in that, we have very good partners where we have our project in the Cree First Nations and the Cree town and community of Waswanipi. The area, it's funny because if you visited the Windfall Deposit and you looked up, there's a giant hydro line that goes right over the top of the deposit. But unfortunately for us, it's the trunk line that comes from the LG2 power production dams all the way down to Montreal and New York. So, you know, and I say unfortunately because they won't let us turn it off to hook up a substation because everyone down in New York and Montreal will get kind of angry. But about 100 kilometers away in the town of Lebel-sur-Quévillon, there's another line with the substation. So our plan is to build a connecting line from that down the existing Domtar pulp and paper road, which leads directly to our camp to hook up to site. When we put out a resource update 2 years ago, the Cree First Nation government, the Quebec government announced what they call the Grand Alliance, which is a 30-year, almost $5 billion infrastructure development plan. And one of the components of that plan was to build a line from Lebel-sur-Quévillon through the Windfall area. So we're in the process right now of discussions with the Cree First Nation government, Hydro-Quebec, and the government of Quebec regarding that line. And this is what we hope to see resolution on before the end of the summer.
Displacing that CapEx and putting it into your operational costs, somebody has to pay for it. How much would that add to your?
And you're exactly right. Nothing is ever for free. So, it's there's a concept that they'd be building a line for free, but that, you know, certainly it's not the case. It would be part of that infrastructure program. What would likely happen would be that we would end up paying for it amortized over life of mine through an augmented power rate. You know, in Quebec, and we had this when we built Canadian Malartic. We had a power rate assigned to the mine of 4.3 cents a kilowatt hour for the life of the mill. Terrafil in Quebec right now is somewhere, I think, between 4.5 to 5 cents. So, you know, we Canadian, yeah. So we might some of the lowest power rates in the world. It's one of the competitive advantages, certainly in the province of Quebec.
And
just for some of those listeners, if you're doing diesel generation in the jungle or on a mountaintop somewhere else in the world, it can cost you 30 or 40 cents a kilowatt hour.
30 or 40 cents US.
Yeah, US, and power consumption typically is 30% or better of any operating line. So it's a huge component of your cost. So again, you know, we'd expect to see a couple of cents probably on top of the Terrafil and amortized over life of mine as a repayment.
Finally, John, I can't remember. Does Osisko Mining own any of O3?
We certainly do. We own about 27% of the company.
I couldn't remember what you owned the 27%. Right.
Yeah, a lot of those assets were initially in the amalgamated company, which we used as the new Osisko Mining version 2. Those assets were spun out about 3 years ago, 3 years ago. And Jose has been doing a great job of consolidating land positions in Val-d'Or, trading and buying different property packages. But as a result of dilution, principally, we're down to about 27%.
And that 27% is in the 250 million that you mentioned, right?
It's part of an investment portfolio of approximately $100 million, which is part of that $250 million current cash balance. Yeah.
Got it. Okay. Thanks. See you in Denver or Colorado.
Yeah. See you there in person.
Thanks so much, Howie, for your participation. Let's turn to Lincoln Rathman. Lincoln, glad you could attend the call. Do you have questions today, Lincoln?
Just a reminder that you have to unmute yourself to speak, and you can do so by clicking on the orange microphone icon. There you go.
Oh, sorry. Yes. You mentioned that you have done 1.5 million meters of drilling. You know, that's about 5 times as much as anyone else would do. Is it that your deposit is more complicated than typical deposits and requires all of this drilling to understand well?
Good question, but no. Every deposit has its own requirements for how much drilling has to be done. You know, really and truly, analysts like to draw lists of deposit A and B and C and talk about how one has an advantage over the other because of something, but literally every deposit has its own requirements. The drilling that we've done to date has, as I mentioned earlier in the presentation, really only defined our resource down to 1,200 meters on average. And the bulk of that drilling has been used in infill drilling. And as a little story, as an aside, I remember when Sean and Bob and I first took on Canadian Malartic back in 2004, we started our first hole in early 2005. And we drilled it for about the next 2 years, and we came up with a significant resource, and we went, great, we're done. And Bob came in and said, no, we're not. Now we have to drill 4 holes for every hole we drill to do the infill. And we just about passed out because we'd already drilled about 300,000 or 400,000 meters to that point. But literally, to get the measured and indicated categories, they're dictated by mining code like 43101. Where in order to call something measured or in order to call something indicated, you have to have a specific spacing between one hole and the next hole. So in order to get those categories, you have to do that drilling. It's a little bit easier on a bulk tonnage surface deposit because your holes don't tend to be as deep. In a narrower deposit, and ours again averages about 3.5 meters. It's just a function of how many holes you have to drill to get those pierce points to be able to get the tonnage and the confidence on the measured or the indicated level to get that into the resource category. But in terms of does it make it more complicated? No, it's just a function of the the pure number of holes that we had to get to get those numbers on our M&I.
So your deposit is of average complexity, you would say?
Yeah, I'd even go as far as saying it doesn't have, it certainly doesn't have complexities that we don't like. I mean, again, no deposit isn't without its complexities. But the metallurgy is very simple. What we've seen is excellent recoveries. Some of our early work was showing about 93%. Some of our bulk samples have been showing up to 97% recoveries. Really only complicated geology and bad metallurgy are things that you have to be leery of. Our geology is very predictable. Through the course of that big drill program, our target success rate at hitting what we expected to hit has been well over 95%. We can target a hole from surface and drill a hole down 2 kilometers and hit it bang on. That's a pretty predictable deposit.
So I guess that's saying that you understand the deposit very well if you get that high degree of success.
That's right. And conversely, people that don't do enough drilling, that's typically where companies run into problems. If they haven't done enough drilling before they push the button and spend the money to build a mill. And there have been some examples of that over the last 10 years and certainly over the history of mining in total. If you don't do enough drilling to get the confidence that you need, you can be in for bad surprises. But we're very, very comfortable, particularly with the drilling density that we have, but also because we have that 8.5 kilometers of underground access through the exploration ramps and the bulk samples that have confirmed that work.
We recently heard Sean Rosen's presentation a few days ago, and he also is doing a great deal of drilling. Is it that companies beginning in OSI like to do lots of drilling, so they start with a very, very large initial resource? Because you already have a resource which is significant. You could go and build a mine and mine it. Well,
you can have a large resource and not be able to build a mine because you won't get the numbers you need in your feasibility based on inferred drilling. You can only really use measured or indicated space drilling in a feasibility study, or it doesn't work. Nobody's going to give you the money to go build your mine if you can't prove to a certain very high degree of certainty that your deposit's actually there. So I'd argue that there are lots of deposits out there that are big on paper, but with subject to further drilling. And Canadian Malartic and Windfall are poster childs for what happens when you do lots of drilling. You get a very high confidence, very high level of mineability deposit.
Mm-hmm.
In the case of Canadian Malartic, that 1.5 million meters of drilling that we did, if you go back and you look, and like the gold bars showed on the front slide, those were gold bars because people tend to forget we were miners and producers for about 4 years while we ran the mine until we were forced to sell it to Yamana and Agnico. But while we were mining it, and now subsequently since Yamana and Agnico have been mining it, the gold produced was predicted by us, and they've hit what they were expecting to produce every year by plus or minus 1 or 2% because we had it so tightly drilled. And that gives you a level of comfort that you can go to sleep at night and know that you're going to hit your mining targets.
Mm-hmm. Good, thank you.
Thank Link very much for your questions, Lincoln. We'll turn to Steve Shipman. Stephen, questions today?
Am I unmuted now? John, hello, how are you?
I'm very well, thanks.
Just wanted to make sure as a follow-up, that some of the monies raised over the past few years were to set aside funds for the mine construction and capital expenditures. You're still good with what's on the balance sheet now to get into that mine development and CapEx if needed?
Yeah, no, certainly. I mean, it's if I have my ruthers, you know, I don't intend to do any other equity financings either for exploration drilling or for mine build. We've got a strong balance sheet right now. We've been advancing the underground work, and we've pre-ordered our mill shells and just recently the liners. Money is very inexpensive right now, and you know, when you go to look at your mine build, our capex that we're showing on our PEA was about 550 million, minus the power line. It's about 500 million or less. Money is inexpensive right now. We've had all kinds of offers from different groups to do mine finance. Certainly, I think doing the bulk of the finance for the mine through debt financing is a much more sensible way than going out and doing a big equity raise at this point. If you go back and you look at the numbers in the PEA that we published in the spring, under the circumstances that are shown in the PEA, and this was using $1,500 gold, we had about a 1.5, 1.8 year payback period for the mine. So, you know, certainly I think debt financing to finish the build of the mine is the way to go.
Great. Thank you so much.
You're welcome.
Thank you, Stephen. Ron Shore. Ron, question today.
Yeah, could you briefly describe the camp you have and how many people are working there, and whether when you're in production, will all of the workers be in that camp, or some come from La Belle-sur-Quevillon?
Yeah, certainly. The operation that we have in place right now houses on average about 350 people, you know, with 35 drills and the underground exploration ramp. Other work going on and exploration teams, the camp support staff. In total, we have about 700 people plus that rotate in and out of there on 2-week rotations. As we get through the exploration program and into permitting, and then eventually into mine construction, you see a higher number of people show up than you would have on your mine force. That's the construction force. But our camp, I think, is adequate to house that construction staff. You know, eventually we'd be looking at a mining staff that's probably somewhere in the neighborhood of about 400 people to staff and operate the mill.
Could you tell us almost mile by mile what the road from the mine site to La Belle-sur-Quevillon is like? Is there anything more than 2 lanes? Is it all paved or mostly paved? Give us some ideas about that.
Sure, I've been up and down that road many, many times. In fact, the first time I went down that road was in late in the fall of 2004. We were doing some drilling on the Berry project, and Bob Wares and I went up there, and anyway, long story short, we ended up driving back down to Malartic the next that evening. And drove around the property. And the next morning we put the bid in on that, and that's what kept us busy for the next 10 years. But it's better than a 2-lane road. It's the main trunk road that Domtar Pulp and Paper was using to do their forestry work in that area. And it essentially runs about 110 kilometers straight from La Belle-sur-Quevillon. It starts on tarmac and then goes as a gravel road that's maintained with graders all year long, including through the winter. It's open 365 of the year. And you know, there's not a lot of road improvement we have to do to that road. There might be some culverts, but it wouldn't be anything more than in the neighborhood of $4 or $5 million of road upgrade. And we have done the road survey.
Yeah, you are part of Quebec Nord. Is that legislation giving you any money for power or any other improvements due to that legislation?
Well, this is the permutation with what was called the Grand Alliance, which was announced 2 years ago. And this, I referred to this earlier. This was a cooperative effort between the Cree First Nation and the government of Quebec. And this is where they're planning to spend about $5 billion on infrastructure projects on Cree territory in the coming 30 years. In the first 5 years of that program, the hydro line to Windfall as one of the first projects it was contemplated. So is Plan Nord? No, but is the Grand Alliance? Yes.
Okay, thank you much.
You're welcome.
Thanks, Ron. Let's turn to Roger Fitzpatrick. Roger, question today.
A very good presentation. How about giving me a breakout of your shares, ownership, institution, retail, and management?
Yep, sure. As management and insiders, Osisko Gold Royalties, this was the spin-out company from when we sold the first Osisko Mining, owns about 13-14% of the stock. Collectively with the rest of management, directors and insiders, we own another 5 or 6%. Institutionally, within the first 10 shareholders, you're looking at approximately 50% of the shares.
Who are your biggest institutions?
Biggest institutions are based out of New York and London. Groups like Van Eck, that's not saying much, because Van Eck, I think, is everybody's biggest shareholder these days. But Van Eck and Tocqueville under Sprott. The Caisse de Depot in Quebec, Investissement Quebec, we have very good participation from some of the Quebec pension funds and investment funds. We're the second largest investment as the Osisko Group in Quebec amongst our company groups. They own approximately $400 to $500 million worth of stock in all of our different companies. And some of the UK funds and so on and so on.
Okay, very good. Thank you much. Great presentation. Thank you, sir.
Thank you very much.
Thank you, Roger. We have Charlie Paradise on the line. Scott, if we can unmute Charlie. Question? Possible?
Can you hear us, Charlie?
Well, if you insist on me asking a question, has this ever been, at what point did you decide to do open pit versus underground? And have you ever questioned the decisions you made over time about that?
This is going to be an underground mine with ramp access through 2 ramp portals, Charlie. The whole thing. No, the open pit mine that we were discussing, or that I was referring to earlier, was an earlier effort that we had when we undertook our first mining project as Osisko Mining Corporation back in 2004. That's now the 3.5 kilometer long, 700-800 meter deep Canadian Malartic open pit. It's the 10th largest gold mine in the world right now. But that one lent itself to open pit mining because it started at surface and the average grade's about 1 gram. This is a high grade deposit underground. The widths of Canadian Malartic were sort of 100 to 150 meters wide. This is about 3.5 meters wide on average. So it lends itself to underground mining. And again, we won't be using a shaft, at least not in the early parts of mining. This will all be extracted down to about the 12 or 1500 meter vertical level through dual ramp access.
And the grade supports it, so that's good. Thank you very much.
Yeah, thank you.
Thanks, Charlie, for your question. Well, let's turn to Mike Ward. Please, Scott.
Well done, John. I like what I'm hearing. I don't have any
Mike.
questions at this time. I will yield my time back to the other 60 participants waiting to ask their question.
Thank you, Mike.
Thank you, Mike. Let's turn to Michael Appleby. Michael, do you have a question today? Michael is muted. Let's turn to Larry Parks. Great to have Larry on the call with us. Larry?
Larry, you're on mute.
Larry, can you unmute yourself by selecting the orange microphone icon?
Okay, we'll come back to Larry. Let's go right to our friend Jerry Needleman on the line. Jerry, great to have you with us.
I've been involved in a lot of the Osisko investments, and I'm real happy with them. If you're pushing 80 years old, how suitable is this investment right now?
Well, you're not going to have to wait that long, and I expect you're going to live a good another, 30 or 40 years. We hope to, on our current plan, we hope to have this in production within about 2.5, 3 years.
Right. Okay.
Permitting is what permitting is. We can control the aspects of our drill program, the aspects of our construction. But certainly we anticipate what the permitting period will be. But in our experience and in our understanding of how it's working in Quebec, and particularly in our area at this moment in time, we would expect it to be within the parameters of our anticipation. So we'll be looking at first production in 2024 and first full year production 2025.
Like everything your team has been doing over the years, fantastic. Keep it up.
Thank you. Appreciate it very much.
Thank you, Jerry. Let's turn to Chesley Morton, please.
Okay, well, I wanted to first do a follow-up on Roger Fitzpatrick's question. I think he was diving down into the institutional holdings, closely held stock and so forth. It sounded from the numbers that you've got, what, about 25, 30% of the stock in the float?
Yeah, I think it's closer to about 40 or 45.
Oh, good, because I thought it was 50% plus all those other percentages that seem to add up to something like 70. Maybe I misheard that. So where are your shareholders on the retail basis? Are they evenly divided between U.S. and Canada, and where's the volume?
Yeah, certainly. I think the greater proportion of our Canadian retail shareholders is in Canada. Over the last 17, 18 years, we've certainly had a strong retail following. Initially, we had a huge retail following out of Germany because we cross-listed ourselves on the Frankfurt Exchange. The initial money that came for the first Osisko mining was European. It was a fund that Sean Rusin and I were involved in, and we had German partners, and we put about the first 10 or 15 million dollars into the original Osisko. Did a lot of marketing in Germany. As that progressed, we had a huge retail following. Initially, we did a lot of marketing across the U.S. and out west in Canada. Made lots of millionaires over that first company. Over the years, we had a ton of people come up to us and tell us that they put a new porch on the back of their house or bought a boat, and lots of really interesting stories. Because that first Osisko started at 5 cents, and we split the stock once at $16 down to 8, and it went back to 16. So literally, we took the stock from about 5 cents to $32 over the course of the first company. Today, our retail shareholder base, as I say, is probably more heavily weighted in Canada. We do have retail groups in the States. I have a number of people that call me on a pretty regular basis out of the West Coast, and New York State, and other places.
Those stories are always rewarding. Now, kind of putting on your Swami hat here, because this is pretty forward-looking, but the vagaries of the marketplace are such that a couple of good operations have had some tough times due to grade control.
Yep.
And I know you're probably pretty familiar with the mineralization in the upper reaches here, closer to the surface. You think that'll be challenging at all, or you think you've got that pretty down pat? 3 years off, but
yeah. We think we have a pretty down pat. I mean, all of the initial met work that we did before we got our bulk samples was very positive. The bulk samples certainly came back, all aces and shining. The second bulk sample we took, we actually had 66% of the gold report to the gravity circuit. And the fellow who ran the mill said if he had another gravity trap on there, he was sure it was going to go past 90. Now, typically 20 or 30% gravity recovery of gold is considered excellent. So it's got very simple metallurgy. If anything, as we drill deeper into links 4 and triple links, and these are the deeper, high-grade, wider zones that we have in the deposit, we're seeing principally more gold and a little bit less sulfide. So I wouldn't expect it to get any more difficult. Conversely, I'd expect it to get a little bit better as we go deeper.
And then finally, sort of a board philosophy on how to play this long term. There might be a compelling reason if we get a spike in gold for you to be at least entertaining the thought of hedging. Would that ever come up, or you guys just come what may? That's what we're going to do.
No, we wouldn't resort to hedging. If anything, sometimes when people are doing mine finance, there are requirements to hedge, depending on who your lenders are. Those aren't the lenders that we'd be going to, certainly, because our intent is to have no hedging at all. We're not interested in hedging. I'm a gold bull. If I wasn't, I should be in a different business. But certainly, I think what we're facing as we come into the next couple of years, particularly about the time that we get into production, is that we're going to see the price of gold on the upward trend, and ideally at much higher rates than we are today. An example was when we again, back to Canadian Malartic, when we built that mine, we put our feasibility study out in the fall of 2008, just before the financial crisis, and we were using $775 gold. By the time we poured our first brick in April of 2011, price of gold was $1,900. And so, I think we're in a similar environment now. I can't predict what the price of gold is going to be, but I certainly think it's going to be higher than it is today.
Okay, great presentation. Thank you very much.
Thank you.
Thanks, Chesley. Larry Parks is unmuted. Larry, welcome.
Okay, you hear me okay?
Hi, Larry.
Good. Firstly, yeah, I think you did a great job. And if I was putting together an all-star team of gold people, you'd be on it along with your colleagues.
Thank you.
I have 3 questions. Firstly, according to the U.S. Geological Survey, there are about 210,000 tons of gold above ground. And the question is, why does the world need so much gold?
Well, I mean, historically, people have used it as a currency, as jewelry, as a safe store of wealth. Every time I hear somebody say this time is different, I don't think it is. I think gold will continue to play the role that it has historically. Just picking up a bar of gold in your hands like this. This is part of the bulk sample from the first bulk sample that we did at Lynx, or sorry, rather Zone 27 in Windfall. Something about the weight of gold makes you want to hold on to it. We're certainly in uncertain times right now in terms of what's going to happen, either with inflation, either with interest rates, with currency devaluation, or what's going to happen as we go forward coming out of the pandemic. But certainly I think the future for the price of gold is good. With the printing of all of that money, I think it's a binary outcome. Gold is quoted in US dollars. The more dollars you print, just looking at it black and white, the higher the price of gold should go. You're diluting that same gold bar with a lot more currency. So my simple, very basic mind tells me that the price of gold must go up.
And there's I'll come to that in a moment. But today, all you can do with gold is bury it or wear it. So what you're talking about is really ancient history. Secondly, for a company to be great, or for an industry to be great, you have to have a great product. And in your view, why is gold great?
Well, back to the bury it or wear it part, the thing is it can't disappear if your laptop crashes and it doesn't burn up in a fire. That's always been one of the attractive things about gold. It is a funny business because we spend a lot of money to go find it, and then we spend even more money to extract it out of the ground, and then we go bury it back in the ground again under lock and key behind a vault door. But it's traditionally over thousands of years had a value as a currency. It's got certainly appeal as jewelry, but depending on which culture and which period of time you're in, that jewelry doubled as being able to wear your personal wealth as a form of protection. They didn't have bank vaults and safety boxes. Today, I think gold plays a similar role in terms of wealth protection. Depending on what happens with inflation, interest rates, and relative value of things, a bar of gold will always be a bar of gold, but I'm not sure a dollar is always going to be a dollar.
Okay, so my last question is really the most important question. And I agree with you, everything you said about the price of gold and the problems with printing money and whatnot. But as the price of gold increases, gold becomes a target for various countries around the world to steal it. And they don't just nationalize it anymore, they do it with all kinds of incremental taxation. So just last week, for example, the state of Nevada pretty much double the taxes that it has on gold mining in Nevada.
Yeah.
My question to you is, how much thought have you or your colleagues, or is anybody interested in working to mitigate the risk that various countries will confiscate or somehow take your gold?
Well, we're working on a program to hand out a shovel with every gold bar that we produce. And no, I'm being facetious there. You know, in terms of what we can do as individuals or as a company against you know, governments moving towards you know, basically doing what the Americans did back in the 20s and 30s in terms of restricting personal ownership of gold. There are other countries that have done similar things. You know, I don't know where that's going to go. I don't think there'd be a lot of appetite for that with governments. Governments these days are really pushing the advent of digital currencies, basically to combat things like Bitcoin and all of these other digital currencies that are coming out. I suspect that the central banks around the world are going to evolve their own digital currencies as a form of not competition, but basically erasing the you know, what is a nascent market in some of these digital cryptocurrencies. I don't think any of the countries out there or the central banks are going to let the cryptocurrencies steal their business. Highly unlikely. But as far as what they do with gold, I think your guess is as good as mine, but I don't think that I'll be looking for either the Canadian or the American government to come after gold anytime soon.
I was thinking about countries like Peru, Ecuador, Mexico. I mean, and you've seen a lot of renegotiation of agreements, increasing taxes. Do you regard that as a threat? I mean, now you have to see that.
I guess if you certainly certainly if you live in one of those countries, I think it's an issue. But you know, this is why, as a group, we've chosen to focus on Canada and the U.S. We have good, stable jurisdictions, very, very clear laws, and very, very stable taxation rates, stable mining taxation rates and things. If anything, the effect that will have with countries that put measures like that into effect is it's going to make things like gold scarcer, because it's going to drive investment money away from those countries. It'll shut down mines, and it'll make a tighter supply of things like gold and silver. So, you know, it's you have to be careful what you wish for, but you know, certainly in an environment where you start to see nationalization or overtaxation of precious metal mining in other jurisdictions in the world, that's only going to drive up the scarcity value of the actual commodity.
Larry, thanks so much for your questions. They were great. John, of course, you worked all over the world and you came home, right?
Yep, I did.
You could be doing this and you came home for exactly the reason you're here. Let's go to Doug Loud. Doug, questions, Doug, or comments?
Well, most of my usual questions have all been asked. However, you had this slide 8 up for most of your talk. And as I look at it, I see these two great swaths going down. It's sort of a white zone in the middle, all the way up to that little Y where the tunnel splits. Is that because it hasn't been drilled, or there's good stuff in there, or there's nothing in there and it has been drilled?
Good question, and one I don't often get. But you know, we certainly have been finding other zones in that area. This is a composite longitudinal section, so it's intended to be a side-on view of the deposit, but you're looking at approximately 800 meters, 900 meters of thickness there. So, you know, those zones are actually separated by space. Now, there is a lot of room. You could drive a stadium through those two zones, and we certainly haven't drilled it all. We have found new zones as we've been doing infilling. We're actually intending to run a drift between those two zones, probably at around the 1,000-meter level, to connect them at some point, and we'll set up drill stations on that underground working area and start drilling up those areas, because we've certainly seen over the progression of the last 5 years, 6 years at Windfall, any white space on the map deserves a drill hole. That's how we actually found the whole right-hand side of the deposit. You know, there's a story I like to tell about when we first got there and we looked at the map, and the whole right-hand side of it was white, and we kept asking why they hadn't done any drilling there, and the people that were doing the exploration at the time were pretty convinced that it didn't go there. Long story short, we went out and we drilled a bunch of fences, and that's when we discovered links. The more we drilled, the more we found, and you know, to the point where even it was only 1.5 years ago that we discovered triple links, and that today accounts for about 1.5 million ounces of our resource, and some of the highest grades. So yeah, there's good potential to find more deposit within the deposit, and that's been par for the course over the last 2 or 3 years as we've done infill. We find more.
That's great. I like the idea that if there's a white spot on the map, you better do it. Like that.
That's right.
Thank you.
We like to dumb it down. I mean, you know, there's one thing about being a clever geologist and one part about being stubborn and not drilling. The drill hole is the only real answer because you know whether there's something there or not when you look at the core.
Right. Thanks.
Thank you, Doug. We got a few more people. Glenn Olnick. Glenn, do you have a question today? Appreciate you being on the call. Just have to unmute Glenn. We tried to. Okay, let's try Bob Hermanos. Pleased to have Bob on the call with us. Bob, do you have a question? Okay. Let's go over to you, Scott. Any questions that have come in?
Yeah, I do have some great questions from the audience. First one would be, I wish to better understand what steps have been taken regarding mill permits prior to mill construction at Windfall. Are your reasoning in pre-ordering the 3,600 tons per day mill in advance of mill and environmental permitting? Approximate delivery date on mill, and great update, thank you.
No, thank you very much. The answer to the mill question is pretty simple. You go back to when we built Canadian Malartic, we actually put our order in for the mill shells before we put out our very first resource. And that was because, you know, at the time, we knew that the deposit was probably over 100 million tons. So the largest mill shells that were manufactured globally at that point were 41-foot diameter mill shells. We decided to go with the 38-foot diameter because they were more like the Ford F-150 that had been tried and proven true to lots of different companies. We didn't want to try new science. But we also knew that if we didn't get our order in ahead of Robert Friedland, who was building Okotoyo at the time, we'd lose 4 years because there were only 2 foundries in the world that could cast mill shells that big. Now the mill shells that we've ordered, it's a 31 for the 3,100 ton a day planned production based on our PEA, but typically when you buy a mill, they'll have an upper rating, and this one's upper rating is about 3,900 tons. It's the longest lead item that we have in our mill ordering, so we placed the order. We just recently placed the orders for the mill liners. And as we progress closer towards permitting, we'll order the other bits and pieces. Now, you know, again, typically a lot of companies will wait till they have their feasibility and their permits, but then you have to place your orders, and you're effectively losing 12 or 18 or 24 months of time where you have to sit on your hands and wait for those things to show up. We've ordered the parts; they'll show up sometime late next year, and by that point, you know, we expect to be well into our permitting cycle. And again, I guess it's a measure of how confident we are that our permits will come in short order.
Great, thank you. And I'm going to unmute Terrence Ortslin, who has a question. Terrence, can you hear us?
Yes, thank you. You hear me?
Yes.
You can.
Yeah. Thanks, John. Good afternoon. A couple of questions. You mentioned about the average width being 3.5 meters.
Yeah.
What's the variance of the width would be in a sense of going ahead with the ramp access and mining methods that you will have, open stoping, long hole stoping versus selective mining, which have the costs and everything else. So just the rough numbers at what to expect with the inflationary environment we have today.
Yeah, the bulk of the mining method would be long hole. I don't think we're going to have to do a lot of selective mining. When we did our very first PEA in 2018, we actually left all the selective mining areas out. We'll model them in at the feasibility and make the call at the time whether we want to go in and get them or not. But you know, keep in mind the feasibility really is only the first pass at the look at how you would mine the deposit. We're not intending to stop drilling entirely. We have all that underground access. We'll keep chipping away at it and adding confidence to convert some of the inferred drilling into M&I and some of the I into M. As we go through that permitting and construction period, just to get an absolute bulletproof understanding of our deposit. But you know, we do certainly have zones, and some of the trial bulk sampling And we recently, earlier this year, got permission to do some test stopes. They're giving us a lot of information as to what exact types of mining and how exactly we're going to do the mining once we get there. It's a great head start and a great way to, again, reinforce that you're not going to make the mistakes when you start the mining. But we are looking at some of the zones because we have multiple lenses in cases, particularly in links that are very close together, that instead of mining one zone that's 3.5 meters and then going to the next at 3.5 meters, some of these afford themselves to room and pillar mining, where we might have a 20 or 30 meter room that we can mine. So, all of this is evolving right now, and this is the information that we'll have out in the fees, but everything's been going in a positive slant.
Yeah, so with the today's technology, how far down can you go with a ramp nowadays, do you think?
The ramp easily would get us down to, I think, 2,000 meters. We are looking at what would happen if the deposit continues off down to, say, with the same strength down to 3,000 meters. And again, for the greater audience, it's not atypical for high-grade underground mines in Canada to go down 2.5, 3 kilometers. LaRonde is down at about 3.5. Macassa and Red Lake went down about 2.5, 3 kilometers depth. But we wouldn't certainly want to access the whole thing down that deep with a ramp. So we're doing some preliminary work looking at where we would perhaps in year 5 or 10, if the deposit continues down to those depths, put in a shaft.
Okay. So what does a shaft cost nowadays? The part of the world per meter?
A shaft down to about 3,000 meters, you're probably looking at somewhere between 150, $200 million. But
a ramp?
Yeah,
and
but
a ramp?
Sorry?
How much does a ramp cost for like a meter or 100 meter?
The ramp costs, I think, right now are about $5,000 a meter of advance.
Yeah.
Yeah. We put about $140 million, or by the time we get to the link sample, rather, we'll have put in about $140 million of exploration rent.
Okay. Thanks for that. Just one last question on the gravity circuit coming back. So I didn't hear what you said at the end of the day. On the average, on the link side, you're probably at 60% to the gravity circuit, and
actually probably higher. If you go back to some of the press releases on our website regarding those bulk samples, the second one we took reported about 66% gravity recovery, but we were using a custom mill. When you do bulk samples as an exploration company, you don't have a mill in place, so you shop around and try and book space in somebody's mill. There are a couple of custom mills in Canada. The most practical one for us that had both proximity and time was a mill in Ontario, but it was a flotation circuit. Our interest in the sample was to get the comparison between the grade of what happens when you mine 5,000 tons and what gold is extracted versus what was predicted by the wireframes. So it wasn't ideal in the sense that we're not planning a flotation circuit, but it gave us the exact technical information that we needed on the grade. Now, the fellow who ran the mill said, they only had 2 gravity circuits on it, and he got 66% recovery on gravity alone. If he'd had a third gravity trap on that, and he was using Nelson concentrator gravity traps, he was pretty sure that he would have got about 90% gravity recovery. The implication for mining is that this is very good news for our mining costs, because it means less time for the ore in the flotation or in the tanks, and less reagents necessary to get the rest of that gold. The more gravity gold that you can get, the better for your operation.
All right, thank you, John, for that. We do have a few other questions.
And just, sorry, I just want to follow that one up with a camera shot here. This is why we're getting lots of gravity recovery. We actually have quite a lot of coarse gold. This is one of the sort of all-time out of the park numbers. I think we got about 90 kilograms per ton out of this particular segment. But there is quite a bit of coarse gold in the deposit. So.
And if you need my address to send that to you, I'll just...
Yeah, with every 100,000 share purchase, proof of purchase, we're going to send one of those out.
So we do have some other questions from the audience, but I think we're going to move to close, and we're going to get those questions all over to you, and then we'll get them back to each individual. I want to thank everybody. We had tons of great questions from the audience today, and we really appreciate that.
Yeah, no, my pleasure, and thank you everybody for the questions.
Thank you, John, for presenting today. Any closing remarks and before we proceed to close? John?
Yeah, just in summary, and again, I'll try to keep it short. Windfall is really a rare asset in the market today. When we started this company 5 years ago, we reviewed somewhere between 3,500 and 4,000 different projects, both in North America and around the world. We only saw about 8 things that we thought we could put into production within 5 years or so. Windfall was one of them. It certainly proved to be a world-class scale deposit and growing. We're only a short couple of months away from completing what's been a very big program, but it's allowed us to get that confidence in that big resource that we have. We suspect again that we're going to get up somewhere around 7 million ounces, and that our measured and indicated category, we're targeting between 3 and 3.5 million ounces for the feasibility. We expect that grade will be up around 10 grams or better. The deposit continues to grow. If we were to continue drilling it, we suspect it gets much bigger as we go down plunge. Recently, we've had very good success just 1 kilometer to the north. We're seeing some of the highest grades we've seen outside Windfall anywhere on our whole property. And still, if you consider all the drilling that we've done to date, it only encompasses about a 5 or 6 square kilometer area on our 2,700 square kilometer district scale property. We think that there are a lot of good things to come with the company. We're finishing our resource work pre-Christmas with the next resource, feasibility early next year. Then we're off to the races with permitting and build.
Thank you, John, so much for your presentation. I appreciate everybody's attendance and your questions, and I want to wish you a very pleasant evening.
Thank you, everybody.